It wouldn't be a day of technology if we didn't mention Apple. And thankfully from you, we continue to get more street highs. This time you now have a street high of $350 a share. If you come and take a look at a chart in my terminal, that is well above the median analyst and well above where the company is trading now. So why 350? What's behind that call?
Yeah, it's really a continuation of our thesis playing out from this year into next year in terms of the super cycle. I mean, it really comes down to the math. 900 million iPhones worldwide, about a third of those, 350 million, have not upgraded in 39 months. And I think we are going into a super cycle. 5G is going to be on the tail end of that. And I think when you look at that and mining the install base, some of the parts, I think this is a re-rating stock that continues to go higher. I think 350 is base case. I continue to look out 2-3 years. You could see a stock that now starts to approach $1.5 trillion, $2 trillion in terms of that core thesis playing out over the next 2 years.
What if the upgrade super cycle doesn't materialize?
It's a great question, and that I think is the bear thesis is, okay, we've been there before. What happens if 5G is a bust, especially on the first part? You know, I look at right now, if you look at iPhone 11 and you look at the trajectory going into later this year, I can tell you from our work that we've done in Asia, it looks like right now line in the sand is about 200 million units for the 5G cycle. So in terms of suppliers, all indications are that's going to be a real strong product cycle. There could be speed bumps, and I think we'll, of course, hit those in a given quarter going into 2020. But as of right now, the visibility looks as strong as we've seen it. You know, I'd have to go back 5-6 years in terms of where I've seen. And that's really why we have such a bull thesis here on Apple in terms of not just the Rock of Gibraltar iPhone, but in terms of services and re-rating.
Well, and part of the bull thesis continues to be a supreme balance sheet. And if we go into balance sheet analysis, I'm taking a look at another chart showing, frankly, $100 billion of net cash. That's cash after some of the debt that they have. What is the best use of cash?
Yeah, and they'll generate $60 billion in free cash flow. And you know, I continue to think that they're going to get vertically integrated. They're going to buy more technology within the phone. You saw the Intel 5G acquisition. I could see more of those. But I do think content's going to be what they go after. I believe that they will acquire a studio in 2020. Talk about MGM, Lionsgate, a handful of others that I think would fit the bill because you need, right now, content's key to that services piece. So when you look at the streaming TV service, I think that's something that they can look to acquire. They're going to continue to do buybacks significantly, but I do believe Cupertino gets more acquisitive in 2020.
Dan, I want to flip on over to another stock that you cover, and it's Microsoft. And according to the Bloomberg terminal, you still have an outperform rating on Microsoft. I keep hearing that their Azure cloud product is poised to benefit more so even than Amazon from the shift to cloud. Do you agree?
That continues to be why it's our top pick along with Apple, and really it's been there since Nadella took over. Nadella, in my opinion, covering tech for 20 years, it's one of the most jaw-dropping turnarounds I've seen for any tech company because right now Microsoft is the cloud play. And I think they've further narrowed that gap with AWS. Look at the Jedi deal, it's just a good example of that. So I think on the first phase of cloud, it was Amazon and Bezos. They won that. The next phase, it's Microsoft. And that's why, in my opinion, this is a re-rating stock. Numbers continue to go higher. And that's why I think this is one, we're only halfway through this cloud story playing out for Azure and Redmond.
And Microsoft's Teams product is a big competitor to Slack, which you also have an underperform rating on. Walk me through why you might be shying away from Slack.
Yeah, I think, not to be too Game of Thrones here, but I think winter is coming for Slack. Because when you look at Teams in terms of where that's focused on the broader Azure 365 sort of holistic vision, Teams goes up against Slack. And I think what's going to be tougher and tougher is that Slack tries to further penetrate their core Microsoft install base, which is key to the bull thesis. And that's why I think Slack's a stock that still, in my opinion, goes significantly lower from here. because of that competition. It's tougher and tougher to go up against Microsoft on this area. Slack's a phenomenal company, everything they've done. I just think some darker days ahead as they go into Redmond's core turf.
And you also cover a lot of cybersecurity stocks, Palo Alto, Fortinet, Checkpoint, Norton, LifeLock, especially as we head into an election year in 2020. What is your thesis on cybersecurity?
Thesis is IT spending is going to go 3 to 4%. Cybersecurity, as of right now, is growing about 6 to 7 times that number going into 2020. That's why right now, in terms of cybersecurity, that continues to be, I think it's really a golden age for cybersecurity. I look at names like, Palo Alto, Fortinet, CyberArk, CrowdStrike, SailPoint. You're seeing more and more data move to the cloud. You got to protect that. Today, only 30% of workloads are in the cloud. That's going to 55% next 2 years. Big beneficiary of that is cybersecurity. That's why, in my opinion, going to 2020, cloud and cybersecurity are the two key themes, especially in software, why I want to be invested. I also think there's going to be a lot of M&A in cybersecurity, and I think that's something where it's really fertile and ripe for consolidation.